got a stiletto pattern we're looking at here. It's one of my favorite unconventional patterns. All it is really is an impulse up, so very imbalanced move up, leaving a huge imbalance on the way up, and then a full retrace on the way down with deceleration at the bottom. So like right over here where it starts curling up, this curved bottom is usually a good sign, and usually you'll get EMAs starting to converge, and that's typically going to precede a pump. So I like this pattern a lot. Here's our weekly. If you zoom in, this low got nicked over here, so that's your external low getting nuked. Using our liquidity model, we're treating this as the swing high, because you could see these push up right here, and then that's your swing high. Swing low, actually this low right here. So this is premium, and the imbalance on the weekly is in premium here. So this is a really good draw. Now what makes this draw even better, and I haven't talked about this before, is this devil's mark right here. So what is that? All it is a flat bottom or a flat top candle. And what it signifies, like trading is psychology, right? And these candles are all showing the psychology within the candle as they progress. This sequence right here, these 5 candles, obviously there was way too much supply and the sentiment was weak, so it just tumbled, right? Now, what the devil's mark tells us is that the supply or the sentiment was so bad in that move down that it didn't even wick up to test supply. So there was literally no demand here at all. So in a regular balance market, like right up here, maybe you had like 1-to-1, and then with this wick, it started to build down. So you had maybe 2 sells for every buy. Over here, it must have been something like 8 sells for 0 buys because there was no test. So that devil's mark is pretty much just a visual cue that if you have a drawn liquidity up, and there's a flat top, or well, in this case a flat top, that makes your weekly bias even stronger to go up. So again, weekly external to internal in premium. So that's our weekly. Dropping it into daily. In trend, you could see we've taken out this high here, so that's your external, and then we pushed into this internal imbalance, backfilled it, and then pushed up again. So our bias at this point, now that we filled the internal here, is going to be the external high. Now some people think it's going to be this, but that high is still in discount within our daily dealing range. So this won't be the target. If we get above here, we're actually targeting this high in premium. So now you have your weekly bias and daily pointing up. The only thing left really is your 4 hour. You want to see where the 4 hour is relative to those two. There's a raid, shift, and pretty good displacement above this high. So what you normally want to do here is take a fib from the low to high. At least now you know equilibrium is around where we shifted. But ideally, you want to be hunting a trade on the 4 hour time frame in the OTE, which is going to be the 618 to the 786 of that move. So somewhere in here, we're looking for an area of interest to go long on. What do we see in that range? First thing would be the 4 hour imbalance in deep discount. There's also previous structure over here, and that would be back testing the daily imbalance right here. So you'd basically be pulling back in. You also have a daily imbalance, a 12 hour, and a 4 hour. But what else looks interesting in this range? If you said devil's mark, you're right. There's another one right here. In fact, there's 3, 1, 2, and 3. It was such an impulsive move. There was no supply testing demand on the way up. So what I normally look for a proper devil's mark is I'll spool between time frames on intraday. So 4 hour, 12 hour, you could see the same one right there. but you can't see this one because that one did test a little bit here, and this one wick below here. So on the 12-hour, it's very obvious. 6-hour, again, it's the same area right there, so it's very obvious now on the 6. And this one's a little bit lower. That one's not really showing on there. So basically on the 4, 6, and 12, this is showing as a devil's mark. So this now becomes a very strong draw on liquidity. Also, you have the imbalance, so that's why my magnet is pointing down here. So if you zoom out, not all time frames are aligned yet. So the highest time frames are pointing to up. The intraday 4-hour is still needing to pull back, in my opinion. So our entry in this zone is basically going to be, if it keeps pulling down like this, you want to see this area kind of stabilize, and then on the lower time frames, 1 to 5 minute, you want to see every cell get absorbed. And if you get that, then this is probably going to launch out of this range, because then at that point, once this is backfilled, your 4-hour target immediately becomes this high. So now all your time frames are going to be aligned, and you could just go long, weekly, daily, 4-hour. So that's kind of the way I treat these ranges and how I try to align my biases on multiple time frames. Hopefully that made sense, and I'll make sure to post when this is getting to our entry zone to actually go long for a swing. All right, guys, have a good one.